Hello, this is the Chart Profit video, Friday the 14th of October. We are over 2 hours into the trading day. Pre-open looks like this. We're looking at the Emini SP. Said pre-open on Tuesday that the minor 1 month point of control migrated to this level here, 2154. On the Monday we had a very narrow value area generated above that level on low volume, half the average volume. I said Tuesday pre-open price needs to be monitored relative to that level. Next directional move could be indicated by green, significant buying, or red, selling, being marked above or below this level. We haven't seen that yet. What we did get on the Tuesday was an open just below that level and then immediately sold off. So we've now had 1, 2, 3 value areas printed below that point of control, which is actually a 6-week now point of control. And the first level resistance comes in at 2142.25. That's the half range of the August high. So I would need to see minimum price printing back above that level to look at the long side of the market for new longs, and preferably if the point of control remains at that level, 2154, I'd like to see price back up here. So currently it's in a weak price location, and there's other negatives as I've mentioned throughout the week. For instance, I said pre-open on Tuesday, all 4 major stock index ETFs are now positive, but they all ticked lower on Monday. And now, as of Thursday, the momentum price oscillator for SPDR and the Russell 2000 ETF has just dipped into negative readings. Another negative we'll look at in a second is that one of the key charts, IWM, the 5-month point of control chart is printing below that level, broke below it this week, in a weak price location. So we'll work our way through those. First of all, we'll look at the Emini. Okay, this is a 15-minute bar of the Emini SP, and there's the level I just spoke about. That's the level that's been marked for a while, 2142.50. It's the half range off the August high. That is the natural resistance on the chart. Look at this today. Open just below it. A minor, very minor, brief probe above it. We're up a little bit at the moment, so that just clarifies the importance of that level. It's now proven resistance on this minor time frame, so again, price above there would be a positive, price above there, and you can look at the long side above 2154. Currently, let's look at some other very minor negatives here. So I'm looking here at the breadth for my New York list. This is the breadth indicators at the bottom here through Thursday. These 2 indicators, we go through them every week, part of the little system I run, both below the levels that I would consider supportive, and therefore on the pulse chart, this part of the pulse chart here, which represents New York breadth, remains red and negative. And you can see we've had a rally in momentum. It's turned over slightly and we've just gone into negative territory. That's not that important, but if it continues down here, we're trend down as far as this indicator goes. So could be trend down with the breadth looking not so hot. We have support here on the SPDR. This is the SPDR at the top, and I think if we start seeing some red like over here, which represents significant selling on the profile, so if we start getting red down here, we're looking at a pretty different market, and I consider that a pretty weak indication, and I'd expect lower prices. So we need to see the support hold on the SPDR 209.90, it's major support. And we need to see some buying coming back in, some green up here and here and here. I believe it's options expiry week next week. It's usually pretty bullish. I think it's seasonally pretty bullish, but these items I mentioned here are of concern. Just want to run through here the live charts for the stock index ETFs. Some levels have changed. So this is the SPDR. 216.33 is now the 10-month. These will be in the ebook on Monday. That's this level here, and the major point of control, as we've just seen, at 209.90 down here. Price below that level, and things start to look weak. If we do see a test here, you'd at least want to see a bounce back. We see some support from that major point of control, then we assess from there. Price below it immediately puts it in a very, very weak position. Just run through these pretty quickly. This is the Russell 2000 ETF IWM. The 10-month on here, 122.65. Again, these will be in the ebook. That level's actually not moved. It was previously, I think, a 5-month. Due to the time we've spent over the last few days at that level, it's now a more important reference point. So price below here, as you can see, this is weak price location at the end of the week here. This is the Qs. This is another key chart we've been following in the pre-open, and the reason for that is we have a 1 year point of control at 117.25. Back above that today, we did probe below it and the market rallied back to it, but price printing time below that level again would be an indication of weakness. Right now we're kind of hanging on. Diamonds, as we know from the last couple of webcasts, already in a weak price location. The 5 month is up here at 185, and 2 year major support down here at 176.50. It's got a little bit lower. Okay, the UK FTSE 100, I think we're closed now. Just a little change of, I just sampled this on a different time frame. I'm calling the 6 month on this chart. The 6 month support is here at 68.54. Price below here, obviously weak. FTSE 100 doing relatively strong, as explained the other week, relative or because of the weakness in the pound recently, helping the large caps higher. This is the German DAX, no change in the levels that we've talked about recently. The halfway point and the major halfway point is here. We're just printing or finishing the week just a little above that. The 3 year value area high remains at 10,742 up here. That's been it's been difficult for the DAX to print any time above that level, and that value area high has not migrated because this major point of control down here, 97.50, has not migrated higher as we suspected it might. Nevertheless, the German DAX relatively doing quite well today. This is TLT, the bond ETF. Gone through this a number of times, but basically from the high, we saw a decline. We had a 139 level here, which is the 4 month point of control built across this point. A decline, then a rally back to it, and that was obvious resistance, and it really did resist at that point. We saw an immediate rejection, and TLT has come much lower. Attempted a rally here on Thursday, opened weaker today. The big support, 3 year support, was at 130.77. This is GLD, the gold ETF. Again, no change in the levels. The value area high, the 3 year value area higher at 129.94. Again, gold had a problem with that level. Went into a range, the halfway point here resisted at this point, we sold off. The major support is at 118.22. Price below that would give me a very different look on gold, but right now we're holding that level by any technical measure. We're oversold. We should expect a bounce. As I said, if we see price down here below this level, that would be extremely weak. And I'll show you this. This is the Ridex precious metals assets at the bottom here, and GLD at the top. And we've hit, what is that, a 4 month low in the assets yesterday. Looks like the retail are turning very negative on gold. But at current levels, until that major support gets broken, can't necessarily assume too much downside. So look for price, let's say below 118 down here, to really put it in a weak price location. Otherwise, let's hope for a bounce here. Quick look at oil, the United States Oil Fund, the major at 1078. In the longer term, as long as we hold above that level and that major point of control does not migrate higher, this should be major support on this chart. So we might see a decline and a retest, something like that. Price below there would put the whole thing in doubt. Off this low, this sort of trend that we have, generally moving higher. But if we see price back down below this now proven support, it was proven here. This is a halfway point. And if we start to see price printing time under here, we have to look for lower prices on oil. Right now, it's holding up pretty well. Okay, this is the dollar index. Dollar index this week printing its highest level since March, back over here. The 2 year point of control migrated up to 95.57. Just sampled this on 1 or 2 time frames, and let's call that the 2 year point of control 95.57. Just as important as the halfway point in here, which is off this important high back in November to the subsequent low. So this should be the first level support if we do see a decline back down in the dollar, and that was proven resistance at these points here, and we've now broken above it, which I've said many times is a good indication the trend will continue higher, as long as you have justification for that resistance, and in this case it's a fairly major half range. So dollar index doing pretty well at the end of this week here. No change in the levels on the Euro FX chart, and as you'd expect with the dollar index pushing higher, the Euro has come lower. Earlier in the week it broke below its 4-year here. Never really got much upside from this range here at all. We then broke below the 4-year, 111.65. There's a bit of a warning here, and now we've broken below the halfway point of the 2015, that really important low to that high. And I've said over the last few webcasts that price below this level would put the chart in a really weak price location, so that's where we are right now, in a weak price location. We've had these levels marked, and they're unchanged, marked for months actually. The major point of control, spot 76.50 on the Australian dollar, the Aussie dollar, and the 4-year at spot 76.22, just a little lower. And we've said this band here would be resistance or support, depending on how it's approached, but maybe not just yet. But this could be a really interesting chart in the coming weeks and months. I think if we do start seeing at some point price being printed over a few days, maybe a couple of weeks above that level, and any indication of buying here, this could be a major indication that the Aussie dollar is going to move higher. Just seeing strength from where this point of control is coming in on the major distribution. Right now we may see some resistance with the strength generally on the dollar, but the Aussie dollar's up today against the dollar. I don't know, it's just showing signs kind of internally or relatively of strength. Price up here would get me looking at the long side, long term of this chart. Okay, this is the British pound. I'm just showing it on this hourly chart from the flash crash over here, and I'm actually using this level. I think this is all valid, and we really did see a flash crash here. So all the way down to somewhere around 114 something, we've bounced. The minor point of control that we've been following since the Brexit was in a different position. It's actually migrated now to 124.32. This is only over, let's say, 12-15 days. It's an important level, but it could actually migrate lower to 122. That's that dotted line down here. A little bit of time, and you can see how much this level is liked right now. A little bit more time at 122, and we could see the minor drop here. We'll see what happens if that happens, but price below 122 at that point would be a bit of a negative. So it'll happen kind of within the next couple of days if it's going to, if we spend more time around here. Price back above 124.32, if it remains a point of control, put it in a strong position. I'll try and update this in the pre-open. It's an interesting chart. The pound dollar chart that we're looking at here, very kind of correlated on minor time frames to the S&P. To finish, I'm just going to quickly run through the sentiment. This is the Ridex, or my version of the Ridex assets ratio. We had a 7-month high in here in August, up around the top. You can see it here very clearly. On the bull fund assets, if I isolate those, bull fund assets have come off a little bit over the last few days. This level down here often brings in an oversold point where the market starts to rally back. That's a bit lower, as you can see. But interestingly, as I said last week, the bear assets, bear funder assets, if we look at those in isolation, are still extremely low. Just quickly run through these weekly sentiment ratios. Not really give us any clear indications at the moment. The public poll from AAII, the bulls percent was lower, 25.5, bears percent was lower, 25.8. Watching the 4-week moving average of net, the black line relative to this dotted line here. Black line down here somewhere would indicate public are getting or saying they're very bearish. At that point, that might be interesting. Investors' intelligence, bulls percent was slightly lower at 46.1. 8 weeks ago at this point here, the bulls percentage on its own reached 56.7%. That was the highest since May last year, as was the 4-week moving average of the net bulls minus bears at that point. So yeah, again at the top, this and other indicators were indicating some real optimism. Look at US fund flows reported. Equity fund, including ETF outflows of 3.4 billion this week to the 12th of October. And the previous week, the 4-week flow number was a negative 26.28 billion. That was an extreme. That was this black line here. and the lowest since late January. When I showed this chart the other week, I said maybe the market needs to come off a bit. Just looking at the sentiment indicators, I think I said if you just based your opinion of the market just on the sentiment indicators, we might see in the short term a bit of a sell-off, but something like this would indicate it may not last too long. Okay, we're 2.5 hours into the trading day. Market looks like this. So this is the E-mini SP. It's just found rejection at that halfway point. Price above here will be the first indication of strength. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.